Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
You could play, you can play the upside, a little bit more upside, right? Okay, so now we're sort of staring at 3 weeks in the face, right? So that's part of why I sort of said, listen, this market's closing on the highs. I wouldn't get in the way of this because this is a big relief from where we are. Remember, markets kind of perform at the margin. That's what I always kind of remember the saying that somebody gave me years and years ago. And it's true. There's just been a very, very big marginal shift in what's going on out there. So maybe we have a little bit of upside here where, all the talking heads are going to say, wow, what a great turnaround. This changes everything. So maybe we get a little bit of a push into, I kind of see that sort of 5,600 areas as a sort of supply zone where there's a whole bunch of stuff that went on there, as well as really a market that's kind of trying to get a little bit expensive again, as it was expensive at 5,000. I think if you have the chance to kind of lighten up a little bit up around there, or at least, maybe look at some hedges, you could, there's a good old callers that with implied volatility so high, you kind of have to finance that downside with something, in my view. And so you could go out. I was looking at something I recommended to somebody today. I said, give it another day maybe, and then you could kind of get in there, maybe do some, if you want to just create some income, you could just do some upside bear call spreads. You're getting probably $3 for a $10 spread, $3.50 for a $10 spread. That's pretty far away, right? So what happens is in these high vol environments, you get nice premium for quite distant structures. So you get a little bit of, as you should. Markets, like you say, are moving around 8, 7, 8, 9, 10% a day. This is unusual. This will calm down eventually, but with these kinds of moves, really VIX 33 is kind of warranted. I said that even VIX 45 isn't, that's 3% a day. 48 is 3% a day.
But this is actually part of my thesis when I updated on this morning, right? So I had my 2 a.m. post, and then I had a 9 a.m. post, and then I had a 1, and then a 2. Like, this just keeps moving. And what I wanted to say was this whole regime that our capital market is based upon is low VIX, right? Or suppressed VIX. So 10, 20, 30, we're not used to operating in a VIX in this up to 50. And we're definitely not used to VIX operating over 50 for a sustained period of time. Now, I quoted DataTrek, which basically said, I can show it to you, but basically this is like a 0.8, less than 1% occurrence, long story short, to have this type of sustained volatility. And it is definitely, I believe, the year that we're going to have. I think we're just going to have volatility, as I mentioned from the beginning, and we'll have waves of it, and then it will come back down, but we'll base at a higher level. And then we'll have waves of it, and we'll come back down, and we'll base at a higher level. So far, that is working to plan. So folks that are getting, excited about buying this dip, and I want to just show something real quick from a tactical standpoint. This is SPX. So this was the level, first and foremost, that I had given clients way back in January. I said 4,800. So everyone has their 75 or 7,000 hat. And I said, no, remember my article, no 7,500 hat for me. No, no, no. So that happened to be right here about 6,100. Anyway, I have 4,800, which, by the way, I have now ratcheted lower. I can absolutely see an overshoot to 4,000 this year. No question in my mind. But for right now, this 4,878 was perfect support that we got. Now,
yeah, you called that. I remember that. You sort of mentioned right around, that was pretty amazing.
So 4,878 was key. Now, the problem is this candle looks amazing. If this was a Friday, I would say, guess what? We're going to pull back down to 52.65 and we're going to start to move higher. But it's not Friday. It's Wednesday after close, and we have jobless claims and all day Friday and weekend risk. And there's no way you're going to convince me that we're going to close up here. So it would not surprise me if we see this 52.50. I today said, if we can get back above, I'm going to show you it's really, really messy. This right here, this level, 52.50. If we can get above, now before I had already let clients know that this was coming. But the point is, if we can get above 52.50, we're going to go to 5,400. We overshot it. Like 54.51 was an overshoot. I think that's a little bit too much too soon. We went from a 200 day, which is a perfect tag, my 48.78, which is a perfect tag. This was the resistance level. Once we got above that, we were good to push higher into 5,400, but that is just enough. I think we're going to come right back down, and tactically speaking, it is now above 52.50 or below 52.50, but that is just tactically speaking where we're going to be this week. Where we close, however, on Friday will determine my next call. If we we close below that 52.65, it's bearish, period. All we've done is made a fake breakout fast failure. All we've done is make a fake breakout fast failure. We're going to go sideways for 3 weeks until we get through, options expiration and as we head into earnings, and then we head into the Fed meeting on May 7th. So, and if we break 48.78, you're going to see an emergency meeting and Powell will capitulate. That's my baseline bet.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.